Hello, good day everyone. Thank you for coming into this YouTube channel Trade Live with Precise Trader. Today is 30th of June. This is a Europe session. Okay, do take note of the risk disclosure. Day trading in foreign exchange is risky. Past results are not indicative of future returns. The content on this webinar is mainly educational purpose. Use your information entirely at your own risk, and you must assess the risk of your trade with your broker before you put in your trades. So with that, we move on to our live analysis. Okay, the data that's going to be out today is we don't have any much data. I think only data I can see is the German prelim CPI month on month. And also do take note that this week is a shortened trading week because this Friday is US on holiday because of Independence Day, the July 4th. Okay, then as far as the trade are concerned, in fact, morning we sold the gold at 81 half, and we felt that the price is still going off, so we closed and we are just waiting for the next entry. And we gave a selling order at 95. Okay, I'm sure that order is filled. Okay, now today I'm going to share with you how the trade, as you know, you should be sitting in the driver's seat and taking the decisions. Okay, always remember when we get our order filled, okay, when we get an order filled, first thing is that order should be getting filled at prominent levels. Okay, so that's the thing you need to take note. So of course we give a projected level. Sometimes we give a few projected levels, but of course you should be, you in the driver's seat should be deciding whether to get that order to get filled, or should we wait for a better level, or in the event if the order is filled, maybe you may want to lock in your profit, or you may want to take decisions. That's what we want you to do. So like just now I gave an order to fill at 95, but I cancelled it because I was expecting the price to move higher. So now I put back the order. Okay, sometimes okay, I just sold at 94. So now I'm going to teach you, first of all, whether is this a good sell, or should we wait for the next level. Okay, there's a few checks we need to do to see whether do we want to go for the trade, or we don't want to go for the trade, or whether we want to take the risk, or don't take the risk. So this is something I just want to share, so at least you can decide what you want to do and how you want to take the trade. The moment, okay, first rule is, when an order is getting filled, try to get it filled near the end of the time. Okay, that should be the first condition which we need to check. Okay, near the end of the time. Then the next thing we need to check is to see whether the market is giving us any clue of a reversal, or whether this is going to go higher. Okay, so if this is known, then we can comfortably take the trade and hold the trade. But as of now, what I feel is going to go higher, so probably we need to close this trade. Okay, close this trade, so at least we don't take unnecessary risk. So what I want you to do is try to close at, if you have sold at 95, try to close at market. So since I've tried to, I've closed, I've taken a trade at 94. So I'm closing it at market, and I'm going to share with you what are the things we need to be done, whether should we wait for a better level or should we close this at level. Okay, let me share with you. First of all, okay, so now what you need to know is when you take a trade, first of all, we need to know that the time, always pay attention to the time control first. Okay, we need to take the time control, and I want you to focus on the 15-minute candle, just a 15-minute candle, and don't give the risk beyond the 15-minute candle. So I'm going to tell you how it's done. Then the moment, if we see that the trade is filled, and the market is not moving as we expected, then we should be closing that trade, and we should be looking for a re-entry at a better level. Okay, first of all, looking at the gold now. Okay, when I say the time control, okay, if we look now, this is a 2 hour candle. Okay, 2 hour candle, and we have 1 hour left on this candle. Okay, 1 hour left before this candle finishes. So that's the first clue that we have another 1 hour. So we expect the strength to continue for another 1 hour. So we try to exit first. So this is the first one. Then if we take a 6 hour candlestick, then we have another 3 more hours left on this candle. So that means two time frame. One is minimum 1 hour is left. Then another one is maximum of 3 hours is left for this candle to over. So we have to wait, give this time to do. So if that's the case, should we go for a buy, or should we wait for better entry levels? So these are the better sell levels. These are the only things we can do now, as of now, because the market has moved from the low of 48 to 93. It's already moved $45 up. Okay, now and next one is when we look into a 15-minute candle. Okay, try to pay attention on two things. One is pay attention on the RSI to see whether the market is overbought, oversold. Then of course the best clue would be looking for divergence. So when we look into RSI 15-minute, okay, it is reaching overbought, but no divergence is seen, which means to say that the price is going to go higher some more. It's going to go higher, so we will wait. And the two conditions we are going to look for is we wait for another 3 hours to go for a sell, or we wait minimum of 1 hour to go for a sell. Then the next thing we need to do is we need to see what is the probable high or low before we take in a trade. Okay, in this case, if see the market now is in a downtrend, okay, now is in a downtrend. Okay, market down is a downtrend, and what we feel is this high here should not go for sure, if we are right, should not go above this level or above this level. This is the first one. This is your second one. Should not go above this level, because if we are expecting a downtrend, we should see the price hitting lower high and lower low. So if we draw a channel, a down channel, we should be looking for the price not beyond this channel, that means 20. So now what we are seeing now is we have a sell order at 10. So for sure we should know that the price should be turning either at 10, before 10, or maximum at 20. So these are the three clues which we are getting. So when we trade, okay, we should always be trading in a comfort zone. Comfort zone meaning to say that sometimes we can't afford to look for every swings. Sometimes there is a low risk, high reward, high risk, low reward. So all this we have to take into consideration. So as of now, if I look into this, I feel three things. One is we still have a minimum of 1 hour, maximum of 3 hours time left. So that is the first clue that I should be exiting or not getting this fill. That's the first one. Second thing is price is expected to move towards this level. Of course, this one I don't expect you to do, because of course this one is you have to rely on us to get this information to see whether this thing is correct at the levels, and this one you need a lot of experience in getting these figures through. Okay, so now looking at this, okay, all I know is I'm expecting slightly higher, so I am the price I'm expecting is minimum 3310 and 3320. Okay, so these are the two things I'm expecting. The next thing you need to ask yourself, okay, I'm expecting to sell higher. Sometimes the price may turn earlier than my expectation. That means, for instance, if let's say the market starts to come down from here now, if I put a sell at 3310 or 3320, looks like I may not be able to get that order filled. Okay, I may not be able to get that order filled. So if that's the case, then what should I do? Then the only thing is, you are sitting in front of the screen. The first clue of a turn or reversal is the price should break the 15-minute low. When the price should be breaking this low, then we can confirm that probable there is a temporary high seen, and we expect the price to move lower. So of course I'll be showing you a few more checks to share with you. What are the checks we need to do? I'm going to guide you and teach you along, for the next maybe couple of days. So we practice. So at least we know that, okay, we are in the right trade and we should be holding this trade, or whether we should not be holding this trade, whether should we close the trade or do. Because the thing is, you must understand that most of the time when we give order to get filled, or we give, is all projected levels. Okay, sometimes we know the market may turn earlier than anticipated. Sometimes the market may turn precisely at the level. Sometimes it might go just slightly above. Then the turn may happen. So now I'm going to teach you how can we trade. Okay, now what we can do is, since we are going for a trade, okay, this shows right now, you see here the pattern right now it is showing is, market is showing strength on the 2 hours. On the 15-minute it is showing a range. So what we are going to do is, since we are going to trade and look for every opportunities, instead of we going for a sell, we will try to go for a buy. Okay, we'll try to go for a buy at 91, and we can exit at 95. $4 we can make exit, and of course if this breaks, then of course we can make a higher amount. Okay, so now let's I'll give you a trade, then we will concurrently we will discuss how can we maximize this move and how can we trade this market. Right now, we need to see, okay, we need to see the price action on different time frame, different time frame. Then we can come to uh, a conclusion that which side should we stay and how can we capitalize on this move. Okay, just give me 1 minute. Okay, now, okay, what I see is, okay, we are going to see the price going to go higher. If it breaks this 95s, we should see the price going towards 3301 or slightly higher. Towards 3310. Okay, so now what we are going to do is we are going to go for a buy at 3291. Then the stop, we need to put a comfortable stop loss level. So if we take a comfortable stop loss level, we can put we don't have to be very generous on this stop. So we'll put a very tight stop, maybe at 87. So buying at 91, stop at 87, $4 risk, and TP we look for about 3302. Okay, 3302 or 03. Okay, so let's put in this order. Okay, the selling order, I repeat for those of you who have just joined, the selling order which we gave at 95, we closed because we are expecting the price to move higher. So we will go for a buy at 3291, 87, 87 and 3301. We'll put it as 01. Okay, so the price we are expecting, of course, early on we gave a projection to buy at sell at 95. Now our view changed, so we are expecting some more strength to come in. So we are trying to go for a buy, and the high is yet to be seen, and the high, we have to wait for the high to be seen. Then only I think we can be in the comfort zone. So now today I'm going to share with you, okay, while we are waiting for that trade to get filled, I'm going to share with you what is so special about our system, how can we trade with confidence, and what is the purpose and all. So I just try to share with you some ideas, so at least you can get yourself enlightened, and so at least you learn how to do things with confidence without any emotions controlling. So it's just a simple word file I've just typed after the morning session. Okay, let me share that. let me share that file. Okay, see. Okay, let me see. Okay, so what I'm going to share with you today is what is so special about our system, and how we are also going to teach you slowly, like as I told you, we want to get this thing through, in just 1 2 weeks time, and we want to fully concentrate on trading, and we want to move on. Okay, so the thing you need to understand is, wait, let me see whether I can. Okay, so now what is so special about our system? Okay, basically we try to identify the trend. Okay, basically identifying the trend, there are three types you need to know. uh, Basically is the short term trend, medium term trend, and long term trend. So when we look at three different time frame, like for instance, short term is within a day, okay, medium term is within a week, then long term is more than a week, we can take it as a couple of weeks. So we will try to define this trend in three different time frame. So that means the reason why we want to do that is to get a precise movement of the market. So whether the short term is up or down, medium term, because the three sometimes th- three can be in the same directions, sometimes three can be in a different directions, sometimes one can be in one directions, two can be in the same directions. So now if you are going to define the trend for the gold now, okay, so the long term is down, okay, because the market is weekly is already pointing down. Medium term is, I would say, limited down or cautious down, meaning to say that the price is still expected to go down. And short term is, okay, it can be up, which is right now the market is showing up. So that is the thing we need to precisely identify, we define what kind of trend are we talking about. Then the next thing we need to know is, of course, not say no. What is so special about our system is we have a precise entry, exit, stop loss level. So when we take a trade, we try to enter with the precise entry, exit, and stop loss level. And of course, the next thing is a trading volume. The trading volume should also define our confidence, meaning to say that when we take high risk, low volume, low risk, high volume, and that should be the theory behind at all times. So every time when we have a low risk, we go for a bigger volume. When we have a high risk, we try to go for a low volume, and that defines the stop loss as well. So that means the stop loss should be going in accordance with the risk and the risk and the volume. Then the next thing we also mention is the expiry time and holding period. So we normally define our holding period, meaning to say that how long you plan to hold and how we are going to take the trade. And remember, whenever we are going for a bigger profit, we need to give more time. Whenever we are going for a smaller profit, less time. And the losses is the other way around. That means when you are losing, try to get out with the minimum loss. When we are making, try to manage the maximum profit. Then of course we would also do a re-entry and add-on entry. Okay, so our system will also help you to take an entry, add-on entry, re-entry. You know, when we get stopped out or take profit, we always try to do that. And the trade managing is something which you need to do, which is your revising of your stop losses, revising your TP, and taking decisions. So sometimes, like just now, you know, the gold we sold at 95, we decided to close because we are expecting the price to move higher. So sometimes if we wait and give more time, it can be a bigger rewarding, and at the same time there would be also a lot of savings to the trade. So that is the thing you need to know. Then money management, we have different types of entries. Okay, we call it first entry, second entry, third entry, best entry. So sometimes most of the time we try to do with two entries on all trades, because we don't just go for one entry, we'll always go with a minimum of two entries. Sometimes we may be three entries or four entries, and when is making one entry is making money and all this, when the confidence level is not there, then we try to take profit and exit. Then the money management can also be done in different methods. One is like averaging. That means you try to take first entry, second entry, average, we try to get out. Then we call it a scaling in. Okay, scaling in is another method of money management, whereby like first in, first out, then you go in, then out, that kind of system. Then we call it a pyramiding style. That means like whenever we go at the base, the least risk, we try to go with the maximum lots or maximum volume. And we also call it a dodging. Okay, that's another method which we use, which we also want to share as we go on. That means like sometimes our view is right, but your near term is wrong. That means your near term, you are in the wrong side, but overall your trend is you're right. So you don't want to lose that trade, get out of the trade, but you still want to be in the trade, but you want to go in a very short term, in a different direction. So at least you just get some savings. So in the event, then you try to get back on track. So that is another method which we use, which we also will be sharing with you, and how we can go about. Then also take note that we have 5 types of trading. We call it scalping, momentum, day, swing, and news. So mainly we will be focusing on day and swing. Previously we were concentrating on mainly on scalping. So now we are trying to push ourselves to day trading, swing trading, so that at least we make more money than we lose, and try to go for quality trading. Then of course we have invented a unique system, whereby the system will tell you the trend directions, entry, exit, stop loss, when to hold, when not to hold, all this stuff is like we can be using the system to get our answers. Then also take note that generally the price action, the price action will move in 4 stages, or 4 different movement at all times. We call it extension, expansion, projection, retracement. So basically these 4 methods I'll show you how it's done, but this is all in a different time frame. That means when we look for a 15-minute, it might give you any one of these 4. Always this 4 will applies at all times, all times. So that is the beauty of that. So you need to identify whether the market is right now, is it in a retracement mode, or whether it's in an extension mode, or whether this is an expansion mode, or it's in a projection mode. So when we are able to identify that, then there's a lot of things which we can define, and we can get ourselves in the right track at all times. Then within that 4 stages, we have called a micro view. Meaning like for instance, if let's say the price is in extension mode on the 120 minute, so that means it's in extension mode on the 120 minute. So when we look into a micro view, then we need to have the beginning, then the medium, the mid range, and the final. So that would help you to decide your final target, final target, so that you can trade with confidence at all times. Okay. So now what I'm going to show you is I just want to just show you one example so that you try to understand this. Then I also want to tell you later on how, as a trader, what is expected from you and how you can manage the trade with ease. Okay, so now I'm going to discuss with you the 4 stages of price action and also the microwave in the stages of the price action. Then try to just have some knowledge and some informations, then you would know what we are talking, why we are talking. So then at least you understand, and we should be in the same language. Then we can trade with confidence. So now for instance, like let's say we talk about gold. Okay, now gold, I'm going to tell you the 4 stages. Then what is the micro view is telling us. Then of course, then after that we decide on what we should we do. Then how can we trade on this market. So now you look into this daily. Okay, when I said the 4 stages: extension, expansion, projection, and retracement. See, right now this market is in a retracement on the daily. Okay, what do I mean by retracement? Okay, retracement meaning this is trading within 100% of and within a range. So that means to say from here to here the market now is in a retracement mode, and the maximum retracement you should see is the price retracing to 3191 or 3120. This is the maximum level you can retrace, but once the price breaks this level, then it becomes an extension of this levels. So extension is beyond 100%, 100% from from place A to place B. Okay, so that is what we call extension. Retracement is within 100%. Within 100%, we call it retracement. Then what is expansion and projection? Okay, expansion meaning when we call about extension, usually maximum level we look for extension is 1618. That means 160 61. That means 1618. Until here, this can be, the price movement can be an extension of from this point to this point. Okay, and this is where we call it extension, and we use a maximum of 1272, 1382 and 1618. That means 161.8, 138.2, and this is 127.2% of this movement. Then expansion is beyond 1618 to about 2618, then it's called expansion, and beyond that we call it projection. Okay, but projection is a bit complex, a bit complicated, but I will show you when we discuss in that on a specific manner. So like for instance, if you call this up move, okay, this up move is definitely, this is a projection mode. Projection mode means because the price has been beyond certain level, so this is a projection of certain level. The one I'll show you as we go on, but as of now I don't think we need that. But the main thing now we need to know is, okay, whether the price is within a retracement or within an extension or within an expansion, and then we decide for precise levels. Okay, so if you don't understand, I mean, I know of course I'm just showing you, maybe sometimes it might be very complicated or complex, but when you try to use it very often, then you should know why we are calling it this, and then how we are able to do it. Okay, now what I'm going to do is I'm going to teach you as a trader. Okay, because of course all this is we can be discussed behind the scene, and we can go, but as a trader, what is to be expected, and how should you decide to see, and what are the certain things which you can apply tools to see whether the market is going to turn or not to turn. So now when we look here, okay, now we are seeing, now you see the daily, this is in a retracement. Okay, this is a retracement. And remember I told you the micro view. Okay, the micro view is, we are talking about the movement from here to here, whether we have to apply the same rules, whether this is a retracement, extension, expansion, or projection of this move. So when we go into the micro view, so the micro view, what we are talking about is just now the price. You see right now, this is a, I'll just show you, this is a, you see here, this is roughly, this is the extension of this move from here to here, and because it's still an only extension because it did not go beyond 1618, so this is within this level. So this is a extension of this level. So now what we are seeing is, we are going to see a retracement from here to here. Okay, from here to here, a retracement, which means to say that this price should not go above 328, 3328 if we are expecting this to be at a retracement. Then again, from here to this low, this can be a extension of levels from here to here. So the price should not go above 3315 and 332428. So you just get this thing correct, so as we use it very often, then you know what we are talking about. So now what we are saying is, we should not see the price going above 3313 or 3328 if we expect to see this price is within a retracement of this move and extension of this move. We should not see the price going beyond that level, which is true enough because right now your RSI is already overbought, so I think the upside is going to be limited. So looking at this, I think the 3310 which we have given might be most likely that should be the high. Then after that we should see the price turning down. So I hope I'm just showing you just the gist of it, and what is to be how can we read the price chart and how we can do. So when we do this kind of checks, then we can be pretty sure that okay, whether we are in the right track or whether we are not in the right track and right move. So what I'm trying to say is that 3310, that should be a valid signal which we are looking for the market to turn down. Then if it really breaks, if there is more strength, then we should not see the price going beyond 3325 and 3328, or maximum is 3338 for sure. Then after that the market should turn down, and once the market should turn down, then it becomes a retracement of that level or extension of this level. So these are the two things which we can focus. So when we try to shift our projections, it will be much more easier, and we can concentrate on how we can do things with ease, with precise forecast and precise entry exit levels. So as of now, we will take it as 3310 as one level. Then like as I said, that we need to get ourselves prepared. So I want to go for another one at 3328. Since I mean there's nothing wrong just putting it, so we'll just put it as 3328 as a selling level. Stop at 3334. Okay, the TP I'll give you later. So this is also, we can put it as today, but later on we may want to change it. We may want to change. Later we may want to change the levels or this. And now I'm going to tell you what is to be expected as a trader. Okay, do you come and sit in the driver's seat? What is to be expected and how can we do things? Okay, so that one I will share with you that that things what is to be expected, and then you take a screenshot. Then we go one by one. Okay, so you take this screenshot. You need to do a check of all this to make sure that you are in the right side or the right direction of the trade. Okay, normally when we give an entry level, there's a projected target which we give based on extension, expansion, projection, or retracement. Okay, so this is what we give, and this is our job. Okay, this is we give, so this is, you don't have to do any things on this. Then as a trader you need to check all this. Opening price principle, I will explain what does it mean. Then current high and low. Then a PT hook, I will tell you what does a PT hook means. Then the RSI, stochastic, moving average, crossover, polarity change. Then a short term low high confirmation. Then a valley peak, the one also I will explain, and I'll share with you what do I mean by that. Then of course patterns, you may not be able to do that because the one has got a lot of, you need a lot of experience. And this is, we call it LR or long range. Okay, long range, we'll put it as long range, then LR. Okay, then time control. So you need to know what is opening price principle, current high low, PT hook, RSI, moving average, polarity change, all this you need to identify. And if you identify, then the more you learn, the more you apply, the more the confidence you will be on your trade, and the more you would be making good money, so you need to know all this. So we will be sharing with you, we'll be guiding you, so at least you can understand how to use it and how to apply as we go on. Okay, like as I told you, we would be going very aggressive this month because we want to share and earn a living from here, so we need to definitely share with you. Okay, now opening price principle. Okay, what does it mean? I think previously I did tell you all. The opening price means the market opening on different time frames. So you can have a weekly open, monthly open, daily open, hourly open, 6 hours open. You just use that as a guidance for our trade. So like for instance, now I'm going for a buy. Okay, just now I was going for a buy at 91. Okay, now you see here, I want to cancel that trade because the reason is it's showing lower highs. Okay, so now let's quickly cancel that buy. Okay, this buy, I don't want to go for a buy because it's showing lower high. You see, the thing can change, the sentiment can change so fast. Okay, now it's showing lower high, a bit of lower low, and for this time we have we are going to leave only another 10 more minutes, 10 more minutes. Okay, so now let's see, let's see. So what I feel now is I may want to give a shot. Okay, I may want to give a shot of going a sell. Okay, I want to go for a sell. Okay, sell at this 95 half. Okay, I just want to sell. Just give me a minute, give me a minute, give me a minute. Okay, I would say it's about a 50-50, 50-50 chance. So I don't know whether you want to take, I'll let you decide, but this is a 50-50 chance if you really want to go for a sell. If not, then you may want to wait to see whether the market is going to turn. Okay, there is a possibility, this may be the high. Okay, this may be the high. There is a possibility that we may see one more high before market is turning down. Okay, so what I'm going to do is, I've just taken a sell, and I'm going to go for a very tight stop. Okay, I'll put it as 98 half. Okay, so I'll discuss with you this trade. Okay, now what are the things to be done and how can we move on with this trade? Okay, so now the reason why I went for a sell. Okay, just now you see early on I wanted to go for a buy at 91. Then I decided to go for a sell. The reason being is because there is a possibility that this may be the high. Okay, why I say that is, okay, remember I told you the checks we need to do. Okay, when we look into, okay, anyway, by my opening price for the gold is wrong, because I looked at the MT5 chart. It says the market opened somewhere near the low and starting to move up, but my my software is showing the other way around, meaning to say that market opened at the high, then came off, then is pulling back. So morning also I was discussing based on that, but I later realized that that opening price was wrong for this app. So sometimes the technical things all issue we have to pay attention in order for us to really trade successfully. Okay, now see here. So just now we shorted. Okay, right now at 96. So now we are seeing the price coming off. Okay, so now what are the things which we need to do? Remember I told you the checks you need to do as a trader. First thing is we need to see the opening price. The opening price, meaning to say the opening price can be different level. Okay, it can be so it can be weekly open, daily open, hourly open. So here the reason why we went for a sell now is, remember I told you early on, we have the market is might be ending in 2 hours time, and we have another 3 hours left on this. So based on that, so if I go for a 2 hours time frame, now this is going to end in another 4 minutes. Then we are going to see a new opening price comes into play. So what you need to check, okay, when we take a trade, we need to ask ourselves whether whether the price is below the open or above the open. So now when we take now at this time, right now at this moment, of course this is trading above the open, but it's in the completion of this open. So we don't have to worry about the open now, because another 3 minutes we have a new opening price which is going to come into place. So then at least we know that, okay, this market is still within our expectation, and still is showing the right we are in the right direction. So the first thing is opening price, to check whether the price is below or above the open. We can go for a sell or buy whenever the time is going to complete, because we are going to get a new open coming in play. So that is the clue we need to apply, and we take that into consideration. Then the next one we need to do is, I told you, we need to check your current high and low. And if you are going for a sell, or if you are holding a sell, your current high should not be higher than your previous high. So which means to say that now if another 2 minutes the market opened, let's say it opens at 90 or 91, then this high is definitely lower than this high. So which means to say that this puts me in comfort zone for a sell. Then I can be holding a sell. Then the next one, remember I told you, the next one we need to see is PT hook. The PT hook is usually you can't define it. This one has to come from us. Okay, what does a PT hook does is that is the least uh, not the least that would be the most you can give before the market is moving into the trending mode. Okay, what do I mean by that? Okay, like now, right now, this market is down, right? So, this market is down all the way. So, the next thing we can see is the market should be either having a pullback means retracement, or consolidation, then eventually come down. There's only two ways this market can move. One is either a low is confirmed, then we should see the price heading higher, or we see the price in a consolidation, a range, then eventually we see the price moving lower, and that is what we call the PT hook. Okay, the PT hook is the one we take. This is a previous one, extension of this low. Okay, this is the hook that is needed for the price to continue in the same directions, and it resets and it starts a new phase. So that means as long as the price is below 3306 and maybe 3317, we still call this a PT hook, and we still expect the price to continue lower. But once it goes above that level, then it becomes a retracement or extension or expansion or projection. So in other words, PT hook is the minor, that means that's the minor level that the price can hold before the market is changing phase or changing direction. Okay, so now you see here, okay, now we see a 120. Right now we got a new opening here. You see here, now we need to see if we are right. We need to see this price high should not be higher than this. Then we should see the price coming down. Okay, then another thing we need to take note is if we are right, we just concentrate on this 15-minute. If we are right, we should see this low breaking 32908, and we should see this high hold. Okay, this high hold, and should not go beyond 96 or 98 in order for us to see that the price is going to go lower. If it breaks high, then we are wrong. Okay, we are wrong. And of course, like as I said, we are only taking the $2 risk. So I think it's worth taking the risk and to see whether we are right or not. Okay, so now the next check we need to do is to see your RSI. The RSI is right now, it is overbought on the 15-minute, but it has yet to give a turn, or it has yet to give a reversal. Okay, so it was just about to give a reversal, but now it's showing strength again into this new time belt, which means that this is not a good trade, and most likely we may get stopped out. So but sometimes we need to know this when we take a trade. So now as a trader, I just have to see whether do I see the break of the low. If it breaks, I'm right. If it breaks this high, I'm wrong. I get out. Okay, then I try to do a re-entry again. Okay, so this is your RSI. And next thing you need to know is always when we look for a market making high and low, we usually get the price moving below the moving average, and the moving average all has to converge and move in the direction of the price. Then only it's called the market has already reversed. Until then, there is no guarantee that this market has made a top. We just have to wait to see whether the high is seen or not yet seen. So if the high is seen, we should see the price breaking this low. If not, then we know that we are in the wrong side. Then we see whether we want to get out. So as of now, is you may decide either you may want to close it at cost, wait for a re-entry, or you may want to fight for the $2. We are just risking $2. So let it risk, then to see whether the price is turning from here. Okay. So like that, I'm going to share with you all the tools which we use. Then you can trade with confidence to see whether you are getting the right price action, or are we seeing the right move on our trade. If we are not seeing, then of course we have to take action. If we are seeing, then we have to stay with the trade and continue in the direction of the move. Okay. So as of now, I think today, Monday, we want to be a bit slow. Euro, I think right now the price is 11725. So we are expecting. So anyway, the buy order I think has to be cancelled now. Okay, let me see, because we already missed that price. Okay, market went up to 11750. Okay, so we have to cancel this trade. We were seeing the price to go up. Then the same thing, pound buying, cancel first, because we have already missed that move. Then the dollar yen selling is still valid, and this gold selling at 10 is valid, and 28 is still valid. So now the only thing we can look for is to see whether we can go for add-on entry. The add-on entry would be if we are right on the gold selling. We can go for a stop sell at 3290 and put a stop at 3296 half. If we get that order filled, then we should be holding Okay, I think let's not put in first because we will give some more time to see whether this price is going to turn or not turn yet. Okay, so I think that's about it. Maybe tonight we look for some opportunity on the Dow and try to trade that as well. Dow Nasdaq. Then we'll see whether we can make some. So any questions? Okay. So if you have no questions, then I'll see you at another 5 hours time. okay, 9 hours. Then, if any opportunity we trade, then we look for that opportunity. So, as of now, the gold we are expecting the market to may have been seen the high. Okay, if it's not, then we can expect one more push eventually to the price to turn down. Okay, okay. Thank you. I'll see you in another 5 hours time. Thank you. Bye.